Thanks for tuning in to today's podcast. Please remember that all of the information in this podcast episode is limited to general information only. That means the information is not specific to you, your needs, goals, or objectives. So you should seek the advice of a licensed and trusted financial professional before acting on the information. And before you acquire or apply for a financial product, please read the PDS or product disclosure statement, which should be available on the issuer's website. Lastly, please keep in mind that past performance is not indicative of future performance. In this episode of the Australian Finance Podcast, Kate and I talk about the $10,000 early access to super rules, what the job seeker subsidies and coronavirus supplements mean for you, as well as steps you can take to improve your financial situation today with all of the packages that are available. We hope you enjoy this episode of the Australian Finance Podcast. Kate, thanks for joining me and welcome to this episode of the Australian Finance Podcast.
Good to be back, Owen, and it's a little bit sunnier than it was yesterday, Sunday. It was quite dreary in Melbourne.
Yeah, we're recording this on Monday morning, nice and early, just to get in and while we're fresh, record some wonderful finance work between us. So what are we talking about today, Kate?
So today we're talking about some of the government subsidies that have come into play recently, and also some of the super changes that you may have seen on the news about actually being able to take money out of your super, which is quite crazy.
Yeah, there's quite a bit of controversy about taking money out of super early, but then also we've seen on the news how people are lining up around the block to go to Centrelink and to try and find out if they're eligible for payments and whatnot. So there are many Australians who are affected by the recent, coronavirus outbreak and the subsequent economic fallout. To be honest, I doubt that we've seen the last of this. We're only in the first inning, so to speak. But already we're seeing, huge demand on the government for resources and for stimulus. And I guess we're hoping just to demystify some of the stuff that's going on, right?
Yeah, and there seems to be new announcements every day. So there's when this episode comes out, there'll probably be something new out there in the news. So it's definitely worth keeping track of it and having a look at the ATO and Centrelink websites, because they seem to be getting updated quite quickly as well. So in terms of information, not access, I don't think.
No, it's a bit of a bottleneck there getting access to certain things.
Yeah.
But we'll provide the show notes that you need in the show notes for this resources. There'll be links there that take you to the websites where you can register your interest for certain things. What we're going to do is we're going to break this episode up into two short episodes. So we'll have one for individuals, and then the next episode will be for businesses. And we'll run through the major, benefits and packages proposed in both of those cases. So why don't we just jump into it, Kate? I'll just start off with something small, which probably doesn't really affect anyone necessarily, but straight up, you would have heard that many of the banks had announced huge changes to their funding. So not only did we have an interest rate cut from the RBA, which then prompted the banks to lower their interest rates on mortgages and personal loans and the like. What we've seen is the Australian government injected around about $100 billion straight into the banking system. And so what that does is, people think, well, why don't you just give every individual $100 billion? Wouldn't that just be a better way to go about it? Well, you got to think about the amount of credit that's available in the Australian marketplace. So people with mortgages and whatnot. Effectively, what the government did there was it eased the friction in the credit market and allows people, and the banks in particular, to keep accessing credit so they can lend out to Australians. So people that, for example, need to refinance their home, or people in business that need to get an overdraft facility or take out a loan to cover short-term cash flow. So that was the first major change that we saw from the government. And the net result for people like you and I, Kate, or even people that have multiple mortgages, is that interest rates have dropped. So interest rates have dropped to around about, in some cases, 2.09%. That is so low. That is so low. So when you consider maybe on I don't have the numbers in front of me, but let's say you have a $500,000 or $600,000 mortgage, that could be around $2,000 a month. So that's really low for a mortgage. And this is clearly the lowest it's ever been in Australia in terms of interest rates and repayments. So that's one stimulus package that is really, really tempting and really, really favorable for people. That's kind of like an indirect thing. Kate, one of the things that, I don't know if I shared this with you, but we've had a fair bit of feedback on Twitter from people asking, is now the time to lock in interest rates? And my take on this is always kind of just take your time. Interest rates are definitely not going up anytime soon. I think I can say that. We can't give guarantees on this podcast, but that's about as close to one as you'll get, I reckon. I guess there's no rush to lock in your interest rate, but maybe you could consider splitting your interest rates between variable and fixed. Just be aware that when you do try and break a fixed interest rate, it can have an impact on you in terms of a cost to break that fixed interest rate. But anyway, that's something for people to consider. It's definitely something that has benefited all of Australia by unlocking that credit freeze or potential credit freeze. The next one, Kate, is, which we'll dig into in more detail in the next episode, is the small business packages, right? There's JobKeeper.
Yeah, and the JobKeeper is the big one for small businesses, and I guess, and then they can also access low cost funding as well through the low interest rates through bank loans at the moment.
Yeah. So we'll get into that in more detail in the next one, but we shouldn't confuse the JobKeeper which is a new thing, with the job seeker, right?
Wow, naming them the same thing essentially, but they're quite different. Yeah.
So can you explain to us what I guess the result is from all of these recent changes for people who are thinking about going to Centrelink or are already on Centrelink payments? Can you just outline what's happened effectively to people trying to get this job seeker payment?
Yeah, so there used to be like a dozen or so different Centrelink payments that you could get for different reasons, like being a pensioner or a veteran or a new parent or blah, 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 lots of different payments. And they've tried to simplify the system to just call them job seekers now. And so you get a certain amount of money. I think I was looking before at individuals, like singles with no dependents, you get, I think it was $565 a fortnight, I said.
Yeah.
Yeah, so you're getting that, and then you're getting an extra $550 a fortnight coronavirus subsidy. So that's a special extra during the moment, and they're waiving a lot of income tests. There used to be a certain amount of time you had to wait between getting unemployed at one place and getting onto these benefits. So they've waived a lot of those waiting periods, and they've waived a lot of you don't have to prove that you're applying for 100 jobs a day as well at the moment, because there's not really 100 jobs. I guess at Woolies there are, but not really anywhere else.
So the net result is what, like $1,100 a fortnight for a single with no kids?
Yeah, so a lot of the newspapers are just using that 1,100, which is the JobKeeper plus the $550 coronavirus, and they're just rounding it to $1,100 per fortnight. So that's a single, no dependents. So it could be a little bit more if you have a dependent, or a little bit less if you've got a partner as well.
Yeah, so if your partner, it's still, so this is what we call means tested. It's still means tested, but just not as aggressively. So means tested simply means that you may have a partner or some sort of assets that make you kind of wealthier by comparison to other people, right?
Yeah. I think there's a bit of argument recently. So they've actually raised the partner's income. So if your partner's still employed, they used to have to be earning less than X amount, but they increased that as well recently.
Yeah, I think it was something really low. Like it was.
Yeah.
It would have just placed too much strain on Australian households.
Yeah, I'm just telling.
There was another one that came through, which was this economic support payment. I think there was 2 rounds of it, which was $750 to, and they said in the first instance, around 6.6 million people who were on some type of welfare payment. And that included also concession card holders. And that was at 12 March. But then they came out and said that, hold on a second, we'll extend that to anyone that applies before April 12th. So that's still a bit of time. And now they've come out and said there's another one coming, which again is going to boost the hip pockets of people that rely on this money, right?
And I guess they're hoping you're going to go and actually buy something like that $750.
Yeah. And I mean, at the very least, you'd be helping yourself, which then helps the economy. And this is the thing that people who, I guess, don't necessarily follow finance that closely, they don't necessarily understand that, this is all interlinked. Like, the government is here for a reason. Like, the reason we pay taxes is for this. And I don't want you to think because you get Centrelink that it means that, like, there's this stigma around it that, hey, it's, you're not as worthy or what have you. You feel a bit of shame about having to go for one of these payments, but that is absolutely not the case. This is the reason we have these things. So please take it up, take advantage of like everything that you possibly can. Like, my wife and I talk about this, and it's kind of like, oh, should I or shouldn't I apply? Am I really eligible? Am I not? Hey, just go and do it. Like, seriously, just go and apply. It takes 15 minutes. And if you think you might not be eligible, well, at least you've applied. And I get that 15 minutes, like, it doesn't turn out to be that amount of time by the time Centrelink crashes about 20 times, but just apply and see what you're eligible for.
Yeah. And there's definitely, you have seen the queues, but if you've never accessed Centrelink before, so I haven't, that was my first experience. You actually have to go onto the website and register your interest. So I'd urge you to do that as soon as possible, because it means you'll get back paid from the date you were made redundant or you lost your or various things happen. So if you didn't have a job, there's different conditions. But if you log onto your Mygov account, or you might have to create one, and then you can click a button that's register your interest, because to put in a claim you need a reference number. So usually you had to go into the store to get that reference number because they have to check your ID and everything, but now they're doing that over the phone, which is a smart idea because you don't want these massive queues if you want everyone inside. So it's quite a few weeks between when you register your interest and you get a call to verify your ID and get a reference number to put in the claim. So it's definitely worth getting in as soon as possible. And then I guess sitting tight and waiting for them to give you a call so you can get that claim in. But I think that's why April's going to be quite a tough month for people, because a lot of people have been made redundant sort of 2 weeks ago when all those restrictions came into place. And if they're still waiting for the call from Centrelink to put in their claim, there's going to be quite a few weeks of no income coming in, which is quite a tough thing to deal with.
Yeah, that's it, right? This is going to be a very tough period. So please do what you can now. I've heard stories of people who have driven past Centrelink and they think, I feel so sorry for everyone that has to line up and go through that process. And then lo and behold, a few hours later, they're in that line. So, this is something for all individuals to take notice of. And as we go through the rest of this episode and also into the next episode, you might not think that you're eligible. There's something that you can do, but please take a moment and consider all of the different options that are available to you, because even if you think that you're not going to be dependent upon some of these things, you might actually benefit from them in any case. So that's an opportunity for you too.
And it's always worth getting in the queue to get that reference number, even if you're still employed right now, because if you need it in a fortnight's time, because there's still going to be more companies working out who they have to make redundant and stuff like that, then you'll have that number ready to go.
Yep. And another thing you mentioned is the Mygov account. We've talked a lot about this on the show, right? Please get your Mygov accounts. Like it's even though you should have one already, sometimes it can take time linking them all together, like getting your business set up to it. That took me some time. And then you have to do your Medicare and your ATO and Centrelink and all the different ones. So you got to link them all together. It might not seem like it should be easier than what it is, but it can take some time.
I know I was trying to link the Medicare to it, and you have to answer so many questions about where was your last doctor visit and who was it with, and I didn't know the answers to any of that, so I gave up. But it's worth persevering, at least linking the key things.
Yeah, because you can see your super in there too, right? And it's so we've talked about this, hopefully if you followed our lessons on superannuation, you know that you can just log into your Mygov account and consolidate all your super with one click of a button. And
you can check that your employer's been paying it on time. And they also, when you put in your tax return and you get your tax return back, they give you a statement on that Mygov portal, and it actually breaks down all the taxes you paid that year and what the split was, what went to defense, what went to healthcare. So that's kind of cool to see as well.
Yeah, cool. Yeah, so there you go. So Mygov helps you connect to Centrelink, helps you connect to everything. So give that a shot. Okay, Kate, the big one, and it's probably the one that people are tuning into this episode for, is superannuation. So
Yeah.
the government's come out, it's stimulated the banks, then it's tried to stimulate households or individuals. Then it said, okay, as part of our stimulus for individuals and for households, we're going to allow people to access up to $10,000 of their superannuation before June 30th, 2020, and then once after June 30th, 2020. So you effectively can access $20,000 of your superannuation. Of course, there are eligibility criteria, right?
Yeah. Yeah. So you've got to satisfy for early release, you have to be unemployed, getting one of these job seeker payments or youth allowance, or after the 1st of January, you were made redundant or your working hours were reduced by 20% or more. And there's some conditions in there for sole traders as well, or businesses if your turnover reduced by at least 20%.
Yeah, so this is an interesting one because obviously if you're unemployed, it's a no-brainer. You're eligible, right?
Yeah.
If you get some Centrelink benefits, including job seeker, which we just talked about, some special benefits or parenting allowances, you're pretty much eligible. You can almost like pencil that in. You're eligible. The other one is if you were made redundant. So Kate, that might include people like yourself, had your working hours cut by 20% or more since January 1st or after January 1st, which is quite a number of people, to be honest.
Yeah, because a lot of employers are deciding to make people part-time or cut their hours rather than completely cut them out.
Yeah, let's say, for example, the day that you apply for this, like I'm just using my accountant hat. Let's say that you apply for this allowance today, and you've been told that you have to take a mandatory week off. So some employers are asking their employees or telling their employees to do this. You know, you might calculate that, hey, yeah, my working hours have been cut by 20% or more, so therefore I am eligible. And you raised it before we started recording, Kate. The thing about this is at the moment, they're saying that there's no proof required when you apply through, I think it's the ATO, right?
Yeah, I'm looking at the ATO's website right now and it says you're not required to attach evidence to support your application. However, you should retain records and documents to confirm your eligibility.
And that's the thing. So, there might be some fines that get handed out in, 3 to 6 months or a year from now for people who perhaps thought they were eligible, but really weren't eligible and they got the money anyway. So
I wonder how much they're going to police this down the track.
Well, I was thinking about this. Like, what do they do if you, like, let's say we go and pull $10,000 out, right?
Yeah.
And then they come back to us in a year. They're like, you took money out of your own super account and you weren't eligible.
And then you're like, well, I spent that.
Well, yeah, what do I do? Like, are you going to fine me for taking my own money out of super? Like, I don't know. Maybe you have to replace it. I mean, that's for some people. Honestly, some people are thinking, well, maybe that's a headache I can deal with when the time comes.
Yeah.
Instead of like really worrying about what's going to happen next, people will actually be thinking, I'll just pay the fine or I'll replace it when I can.
Yeah. Because it was quite a hastily rolled out idea. I mean, no one saw this coming as a sort of a benefit to access your super. But it's going to be very interesting to see how the ATO sort of checks that in the future, and what they do if you took it out and you weren't supposed to. Yeah,
it's one of those things where you definitely want to get your accountant on board, just have a chat with them, see what they say, maybe even get a second opinion if you think that maybe they aren't as helpful as what they can be. Just be aware they're probably very busy right now. So the thing is that there's a lot to debate here, and I think your opinion of it might differ slightly to mine, Kate, even though we kind of sing from the same songbook. So the thing about this is the government has said you can access $10,000 from your super. But right now, and this is a bit geeky of me, Australian government bonds, which is where the government gets its money from effectively. So investors buy the debt issued by the government because it's a really stable economy and what have you. They can get debt from investors for less than 1% a year, right? But now let's think about them so sorry, let's think about them taking that $10,000 that they get for 1%, and they inject it into every eligible person's pocket. So instead of going to your super fund and asking for 10 grand, the government just gives you $10,000 if you apply, right? But then we compare that with the option of taking money out of your own super. Now, the consequences for your super fund aside, which could be devastating to the super fund, let's just think about the cost of taking money out of super after the market has already crashed. So we know that superannuation tends to grow anywhere between 5 and 10%, let's say, over the very long term. So I crunched some numbers, and let's just say a super fund achieves a 7% return. So just 7% return. $10,000 after 30 years becomes $76,000, right? You go up to a 9% return on $10,000 and it becomes $132,000 after 30 years. The basic equation is that for every $1 you take out now at a 7% return, it's actually $7.60 that you miss out on in the long run, right? And so the maths is like the government can get it at 1%. They can get this money at 1%, but you have to effectively spend 7% or 9% if that's what your super fund will achieve to get access to the same amount of money. Does that make sense?
Yeah. It's sort of thinking about that opportunity cost of what that dollar could do over a long period of time.
That's it. And let's not forget the reason that we have a government and the reason that we pay taxes and we have rules and regulations is so that when the individual and the community as a whole get hit by something like this, the government's welfare system should be there to catch us, because we, the people, are the people that provide for the rest of the nation. And so, I think it's pretty disappointing that the government has taken this route. I know it would have been very, very, very costly for the government to hand out $5,000 or $10,000 to eligible Australians, but at the same time, it would have been a lot less costly for the people than what they've proposed.
Because down the track, if people have 20 grand less in their super, that substantially affects their retirement balance, which means that they're going to need more support from the government subsidies when they retire from the pension scheme, which we assume is still going to be going in 30 or 40 years.
So let's say you take $20,000 out in 30 years, and you would have achieved a 9% return, or your super fund would have achieved that. That's 260 grand less. So it's either you've got to find that 260 grand, or that you've got to make it up some other way, or the government may have to support you for that extra amount of money. And so, all of this combines, and it's kind of like, well, there was a better option. Even from an economic point of view, there was a better option. But we've been dealt the cards we've been dealt, so we kind of have to live with it. So what do we do from here?
So I think, the main thing is making sure that you exercise and explore all other options first before you do anything drastic and take 10 grand out of your super, I think.
Yeah, and that's fair enough. But the thing is, though, that there will be people listening to this. We will have listeners to this that need the money. Yeah. Like you said, April's going to be a very tough time. I'm not sure what the turnaround on this super release is, but I don't think it's happening immediately. But the thing is, you're going to need this money if you've lost your job, if you've got bills, piling up and whatnot. So there will be people that need this, and that is okay. If you need the money, you need the money, because you'd rather take the money from here than go into debt.
Yeah, like a credit card or a shark personal loans going to be even worse for you down the track, because it's just going to be something you can't get rid of for years.
Absolutely.
So yeah, taking money from here is a preferable alternative to getting a 20% credit card or personal loan.
Absolutely. And we've talked about this before, that kind of like death spiral of debt.
Yeah.
It's just, you just fall into it, and you have loans coming out of this way, this place, that place. It's all just crazy. And although the banks say that they're trying to cut off interest rates on credit cards and all those types of things, it's going to be tough. So one thing you can do is you could take the money from super and you could crush those debts. So you could just knock them straight off. You could line them up and be like, okay, this is the one that's most painful for me right now. I need to get rid of that. Another thing you might do is you might Well, the first thing you should do when we talk about explore all options is call your bank, talk to them and say, hardship plans, put me through to that department, please. I need to speak to someone. We can talk about consolidating debts. You can ask them maybe if they could waiver interest costs or early repayment costs and do that before you pay it off, right?
Yeah, and they might let you pause your mortgage payments for 6 months. There's been banks doing that and all sorts of things. So you negotiate with them first and see what they can offer you.
Yeah, absolutely. So negotiate with them, explore Centrelink, explore Mygov. Then you can explore this superannuation thing. Maybe you can use that super money to, if you pause your repayments on your home loan, you can use the money from Centrelink to keep, I guess, the food on the table for the next 6 months. But also you could use that money to extinguish those debts. You could use it for any number of different things, right? But also while you do all this, make sure you're thinking about, did I mention the ramen number last week, Kate?
Oh, I think you did, yeah.
Yeah, so it's about finding the minimum amount of money you need to live on. We do this for businesses, you say, what's the minimum number of, I guess, liabilities or costs that you need to pay? How much do you need to spend to just keep the lights on? And that's effectively what you need to get to, because then it makes this $10,000 go further.
Yeah.
It's hard choices, right?
And the big thing is you don't actually have to take the whole 10,000. You might work out, if I'm getting 2,200 a month from Centrelink, maybe I need another $500 a month to cover all my bills and expenses. Maybe you take 6 months worth of that. So maybe take $3,000 out of your super to cover the gap rather than taking the full amount just because you can.
Yeah. Yeah. And don't forget, you can access this payment after June 30th.
Yeah.
So if you decide that, hey, maybe I need, $3,000 or $4,000 to cover me for now, I might not need the rest, but then, hey, July 1st rolls around and you do need it, well, then you've got the $10,000 there. But I would say one thing, I would caution one thing about that, Kate. I would say that there's kind of this old adage, for me at least in financial planning, which is you'd rather have it and not need it than need it and not have it. And so if you take this $10,000 out and you're a responsible person with money, and so by that I mean, if you're an addicted gambler, if you are someone who has a dependency or something like that, or some sort of, your money does unfortunately get abused in some way, you've got to recognize that maybe this isn't the right option for you, or maybe you can take that money out and try and do something with it so you don't touch it. But that's kind of like an aside, but you can take the money out, keep it there. And if you decide to put it back in a few months because you haven't needed it, well, then you can do that too, right? So, we talked a lot about, Kate, on the show, people having 3 or 6 months of cash as, and no debt. So they've got the kind of that emergency fund. Well, if you were made redundant, I would hazard a guess that you're still eligible for this $10,000 or the $20,000, even if you've got enough money set aside to cover yourself.
Yeah, having an emergency fund is not one of the criteria on the ATO website.
That's it. So you could still get this money out and you could do something productive with it. But if you're the type of person who maybe thinks, maybe this isn't safe in my hands, yeah, you could drip feed it out, but just be aware that you might end up not taking enough out and you might need to go back again. But you can always go back. And this is a little bit cheeky, Kate, but we talked about this before the show, before we started recording. You can put money into super and claim a tax deduction, right?
Yeah, I know there's been a few newspaper articles circling about this loophole that they've found where you can actually take the money out and put it back in and get that tax deduction. So I'm not sure if they're going to be able to. I don't know if you can even crack down on it, because what if you just say, oh, I didn't need the money, so I put it back?
Yeah, I would say, to be honest, that the government will probably introduce something in the next financial year that will be to the effect of no tax deductions. They'll go back to what they had 2 years ago, which was no tax deductions for anyone that's not self-employed or something like that. But but that's a thing. That's a little bit of a loophole that is in the tax law and in the government's ruling at the moment. But hey, that doesn't matter. Like the big picture is that people have access to this cash. Okay, so we've kind of laid out, if you do this, why you would do it, what you would use it for. The big thing is, once you do pull it out, what do you do with it and how do you kind of repay or make up for what you've done? And the thing is, we've heard, I think Scott Pape wrote about this recently in his email, but there's been a few others who have said this: make sure you put the money back.
Yeah.
And the way we do that, next year, the year after that, is you up the amount of money that goes into super every month or every quarter. And the way you do that is you just set up an automatic debit with your super fund, and you can claim a tax deduction for that if it's below the $25,000 per year threshold. Or you just set up a BPay plan, or you do a salary sacrifice with your employer, or some other. You can even just ask your employer via salary sacrifice to increase the amount of money that they take from you and put into super. That's going to come out of what you receive in your pocket every fortnight or every month, but you can do that. So let's say, at the moment you're getting around 10% super out of your pay. Maybe in a year or two from now, you set it up with your employer so that it's 10 or 15%, sorry, not 10%. So you're adding that extra bit.
Yeah.
That's a lot of money though.
Yeah, you've got to make a commitment to yourself if you take the money out, that when you get back, when the world goes back to normal and you're employed again and you've got your financial feet and you've sorted your emergency fund, that you commit to putting the money back into the super, because otherwise you're going to be left with like a couple of $100,000 gap in your retirement balance. So you've got to make a commitment to yourself that once it's all over, that you're going to put more money into your super.
Yeah. And I will actually just say something else I've forgotten, but there is a way that you can split super contributions. So if you have a partner who earns more money than you do, or just earns some money and you earn nothing, a way that you can get your super balance higher and kind of like equalize the balances between the two of you is to split contributions. And you can split up to 85% of contributions. So let's say my partner earns, a good wicket and I earn nothing. They get $10,000 a year put into their super fund. I get zero. At the end of the financial year, or towards the end, we can apply, and even in the next financial year, we can apply to have some of the payments that have gone in split across to my super fund. So if you just Google your super fund name and split contributions, you will find the instructions for this. But you can split typically up to 85% of their super contributions into your account. So where am I going with this? Well, let's say that you don't have $10,000 in your super fund, but your partner has, $50,000. You may be able to split some of the past contributions from their super fund into your super fund. And that might push you over the limit to get to where you need to be for super contributions and the withdrawal. All of that said, there are minimum balances that you need to maintain your insurance inside super. So make sure before you do anything that you maintain your insurance. You've got to check with your super fund. Like, this is a massive, risk area for people. They take the money out, push it so low that they then trigger something which cancels their insurance. Most of your super funds are people you can call and talk about this. So you can ask them, what is the limit?
Yeah,
Please
and a lot of them are increasing their customer support at the moment, understandably. But if you've got income protection insurance or life insurance or total permanent disability insurance coming out of your super, and you take the full 10 grand out and that's all you had, suddenly there's no money to pay for that insurance and it might just get automatically cancelled on you. And if you need it, you might not have it. So definitely investigate the insurance, or make sure you leave enough in to keep it going if you do have the insurances you want, and invest and have a chat to your super fund as well, because that could be a really unfortunate sort of outcome of people just taking money from their super without understanding they've actually got insurances in there that they need to pay for.
Yeah, let's use an example. I'm going to be the worst case scenario, right? Let's say that you have, $13,000, $14,000, $15,000 in your super. You take $10,000 out, and for some reason that drops down to $3,000, and you haven't even ever logged into your super fund other than just to take money out, and it automatically triggers this thing where it says below X amount, which might be $5,000 in this case. This is an example. Default income protection that is applied to your account when you join the super fund, regardless, that triggers that you cannot pay for those insurance premiums, so the insurance is cut. Then let's say that in 3 months from today, you're severely hospitalized by some injury, or you catch coronavirus and you're one of these people that gets severely impacted by that, but you have no insurance. These are the things that you really need to be careful on before you go dipping your fingers into superannuation, just speak to someone, or really just carefully read the insurance guides for your super funds, call them, do all those lovely things that you've always put off. Do it now before you make any decisions. You've got time on your side here. It might not seem like it, but you can take a day or two, so 18, 20 hours to really just review your financial situation.
I mean, everyone's, I guess, apart from sort of our frontline medical stuff, have probably got some time to read the product disclosure statement that they've never read before.
That's it.
And you also have access to free financial counsellors. So that's, we've put the links to that, but if you just Google that, you'll be able to find the free Australian financial counsellors and contact them, and they may be able to assist you with exploring different options as well when it comes to this, because it's a big decision to make.
It is a big decision. So I'm conscious this episode has gone on for a little while, but one final thing I might add is that if you take money out, some people like myself might be looking at the rules for taking money out of super and putting it into other assets. So, for example, we use the example of taking $10,000 out and it compounding at 7%. And that's kind of like your opportunity cost of what you lost. But let's say you take the $10,000 out and you invest it yourself. That's a hypothetical scenario where someone could take money out of their super fund and then invest it themselves for the long term in their own name, right? And that's kind of the counterpoint that I put in an article that I wrote recently, which I'll put a link in the show notes to, about if you know how to use your money and you're not going to use the money for anything like a holiday or, buying a TV or something fancy, like it's just ridiculous. If you're going to use this money for your long-term benefit, that's something you might even consider. Now, I'm not saying that's something that everyone should do. Definitely not. It probably applies to 0.1% of the population. But it's something that people would consider. Just be very careful about, overestimating your ability to invest and also about the tax consequences, because when something is outside of super, so when you're not using the money inside your super fund, you can actually be taxed more.
Yeah.
So that can really slow down your growth.
And whether you can outperform your super fund.
Yeah, that's it. That's another question altogether. Like, don't overestimate your own ability.
Yeah.
But that's something you could do, right? You could say, hey, I can see what my super is invested in. Why don't I just take the money out and invest in that myself? And you could do that. Okay, so Kate, I think we've kind of gone on long enough. To recap, what can people do for Centrelink?
I'd just go in and register your intent to claim and hopefully get a call in the next few weeks to verify your identity and get that reference number. And then you can put your claim in for that and see what you're able to access. Talk to your bank if you can negotiate any home loan payments, personal loans, credit cards. If you can get that interest stopped for 6 months or something like that, that would be fantastic. And negotiate with your landlord as well. I know there's sort of an eviction ban, but just chat to them. They're humans, you're humans, and sort of see what you can do. Maybe you can pay a discounted amount for the next few months, and also set up your Mygov account if you haven't already.
Yep, that sounds like a great list. I'll just add one thing on the end here. It's kind of like a bit of promotion, but for April, on our website, Rask Education site, we've made our A to Z complete money guide free. So for anyone that enrolls, we've already had 300 people enroll in less than a week. So please, if you're interested in learning about finance, getting on top of things now, you can get the full online course for $0. So we'll provide show notes to that. And Kate's always writing stuff for How To Money. As you know, she put out some great show notes last week. Kate, I think it was the most popular set of show notes we've ever put out, or thereabouts.
Yeah. The resources and sort of different online learning tools episodes. So that was definitely a popular one, and it's definitely cool to see everyone doing all sorts of different projects and different things at the moment. So
yeah, so we can see how many people visit our websites, and we saw after we put these show notes out, and in particular on Kate's website, how much you guys loved all of the resources Kate come up with. So We're going to put more show notes in today. Obviously, this is a really important episode for show notes. Please take a look, explore it all, sit down, grab a coffee, grab a red wine, grab two. I don't really mind, but sit down, take it all in, take a breath, stay safe, and let's get on top of our finances now.
Absolutely. Thanks for listening to today's episode.